Welcome, it's a new episode of Wall Street Station channel. Today, as it's the right time and right day, we will discover another American automaker specializing in electric adventure vehicles. This time it's about Rivian. So some peeps claim that investing in Rivian is not just investing in a car company, but it's investing in a cleaner, more sustainable future for our planet. But will this investment in Rivian eventually pay off, and you won't end up like this one at the parking station? Alright, so we'll jump through the fundamentals, sentiment, also technicals. We'll talk about possible trade ideas regarding where we are right now sitting and what's about this great accumulation that right now takes place, or distribution. We'll talk about what all that means for Rivian that we have just found ourselves at. So without any further ado, let's head on to our first element. So Rivian, what is it and what it serves? Just jump into next element, but let me know at first whether everything works fine with it. There's audio and video in a at least high quality. So if so, we can right now move forward. So I wanted you to right now get familiar quickly with what Rivian is offering to us. So Rivian produces electric adventure vehicles such as the R1T and R1S, and it is offering, sorry, my looks like one of the window cannot really zoom in, but not worries. We are just going this through and tweak it at the next episode. So Rivian once again is offering a variety of customization options for its vehicles, and what we can find right here is the one of the very few companies that offering this adventure cars. So unlike any of its peers, it offers a very nice Jeeps that are somewhat kind of the most interesting type of type of cars based on electric vehicle sector, in my view. Also, the company provides a comprehensive charging network for its customers, and also what we can say that Rivian is betting for benefiting from a notable deflation in battery material prices later in 2024. Therefore, they expecting to sell not only cars but also those batteries at decent prices. The surge in raw material prices lately due to high EV demand has led to a supply constraints worsened by geopolitical events, and right now it's expected to diminish as EV demand tapers off. So Rivian will be supposedly gaining momentum in two of those sectors. So right now let's have a look at hard data. So among many of those findings out of the income statement, we can find that gross profit unfortunately is at the negative level. So unfortunately right now the Rivian is still unprofitable. So it means in order to gain valuation in time with such of a trajectory of development of company right now, it is highly unattainable for a long term to just sustain its long-term potential. However, as we reminding Tesla was unprofitable for many years, and eventually it started to realize and eventually realize its premises and their forecasts. In terms of operating income, also we are right now suffering, and also earnings per shares are not yet positive at all. Right now, however, let's have a look at cash and debt. So cash is diminishing and debt is rising, so that's also negative tendency. And net income is the one that we can find that is for now at the backtrack. So it giving us a kind of a chance to surface a positive returns in the months or years to come. However, a projection for Rivian is higher from here, but still we have many things to prove in order to get to those evaluations of higher $30. In summary, right now we can find a comparison. Sorry for the little bit worse quality of a photo, as I have just recopied this from my previous presentation about Xpeng. So if you haven't watched it, you may just consider watching it right now on my channel, and you may also consider subscription if you just find it, the type of a content valuable. Rivian is progressing in production and deliveries this year, and what we can find delivery, even though in relation to its peers, is it a gross profit negative levels, even backtracking and lagging behind Xpeng and Neo, but the projections for the company are bringing an outstanding view regarding its competitors. So that's the thing, that even though we are right now suffering from substantial financial losses, averaging over 33,000 per vehicle, there are still findings that CEOs acknowledges this issue and outlines steps toward achieving profitability, emphasizing improving losses per vehicle quarter by quarter. So despite those concerns, Rivian remains focused on efficient capital deployment and views its current cash reserves of around 9 billion as sufficient to fund production ramp up. And that's, you can find that juxtaposition of many of findings. So right now the delivery estimates in Q3 at over around 100% year-over-year increase. So that's absolutely fantastic in regards to what Tesla was going through in 2019. We've seen that delivery was rising despite the price was falling. So this discrepancy eventually led to revaluation of Tesla stock and the eventual event in time span of 2019-2020. It just have skyrocketed. So it may also, this parallel may work out in this time for Rivian. So when it comes to financials, Rivian experienced an adjusted loss of $1.08 per share in Q2. However, the company managed an impressive revenue triple-fold, reaching 1.12 billion during the same period. So that's in billion terms the thing that giving us a glimmer of hope for where the company might be heading, and that the trajectory is not this only in dire strides from here. Despite its growth trajectory, Rivian is still, however, facing some recalls and price hikes, and also chip shortages that impacting its journey towards profitability. And even though those great companies such as Amazon have its stake in Rivian, this definitely doesn't really add up to that outlook that the the growth trajectory is only all rosy for that stock, even though the registrations for the company was the highest, at least in California of the United States. In terms of the major outlook, I want to just throw a light on the matter that deliveries are right now, in terms of units, are exceeding Tesla all-time delivered. So we can find that right now the demand for the cars are giving us the great outlook for the next coming quarter. Therefore, Rivian's earnings are about to be expected even better in quarter 3 than in quarter 4 than quarter 3. So the company aims to produce 52,000 vehicles in 2023 after adjusting its target from 50,000 due to improved supply chain conditions. And even though EV industry in the US is facing some concerns about softening demand due to higher borrowing costs, also leading to price cuts among competitors, Rivian is delivering that outstanding amount of cars to its clients. What's going on, however, right now? Oh, it looks like those words have skewed to the downside. So it were about plans. They're here. Maybe when I exported the dog, that happened. So I've just explained it to you. There were plans. There were some concerns and earnings. So Rivian is right now planning on convertible bonds, and CEO said that it plans to sell convertible green bonds worth $1.5 billion. So it may be eventually dilutive, as we have just experienced this with NIO. At the price action of NIO after just revealing that news has slumped, but eventually remained in price at the floor being built back in the second quarter. Right now, for this stock, the Rivian may eventually also have its downturn momentum for now, and the bonds are really working out in that way that they will mature in October 2030, so investors will have the option to convert the bonds into cash or shares. Therefore, we may find that some of the stocks may get some of the units of stock may get eventually diluted, and in the short term it's viewed negatively, but in a longer term horizon it's still a kind of a hedge against a kind more likely pesky times ahead for the economy. So for now the company's cash balance is stood at an estimated 9.1 was it billion as of September 30, down from 10.2 billion in June. And despite those cash concerns, the delivery expectations, thanks to also such actions like that, is expecting to rise. That's why I do find that CEO is making the right bet, even though in the short term it looks like it's some of the cataclysmic in its results. Right now, let's head on to macro. As we do know, that macro impacts every single stock, especially those lower cap stocks as Rivian. So right now we are fighting for maintaining a bull market, at least in a short, medium term. However, the VIX, the index of fear, right now pointing that we are at the same fear as it was back in March. However, we are still, don't forget, we are still in the period of a seasonally positive returns for the market time span. So it means that October, with the half of the October, there was statistically the best time to buy stocks, and that may eventually repeat this time. That's why I do find the possibility that this sell-off that happened in March may eventually end up in its pressure right in the beginning of October, and we may still jump back into this backtrack of a VIX lower environment, even though the rise in bond yields typically ends with a financial accident. This time it may end up with something bad, but for this one to realize, it may just will unfold within next couple of months, not weeks. So downside momentum is right now escalating, and technical levels have been taken out, but that's not a time to panic in my view. Stock market participants are still optimistic that improvements in the labor market will allow the Federal Reserve to reduce its cautious stance. So tomorrow we have also ADP data, and what was it? The ADP? No, it was non-farm payrolls at this time, and therefore without revealing this data, there are still many of uncertainty, but it may eventually will pivot, will have its pivotal moment tomorrow after release of this gauge. So in terms of seasonality, I do find that there is a space for Rivian to thrive, especially that during the extreme fear on the market, Rivian is looking like it's been resilient. And also finding a possible consolidation pattern. For this one, I want you to jump to the chart. So for here, we can find that after rebounding out of the demand area at the level of 20 important, psychologically important level, we are right now falling and trying to rebound out of the 19.58. However, the one of the most spooky outlook for this is that we have just started a move with inverted hammer, and with such inverted hammer on a double top, it gives us a really dire straits overview for what may come next. If this support won't hold up, we may have another support at 17.89 that will be possibly the point of a rebound. But before it happen, I do hold that we supposedly are rebounding from 19.50, but if it won't work out, we have a couple percent of drop ahead. So it looked like there was a consolidation pattern that will possibly prompt the stock to move toward 30 bucks, or even in a future horizon to 40 within a couple of months. However, we still need a kind of a more resilient data underneath, and that's why I do stand that Rivian's trajectory is most likely followed by this trajectory. So after this AI boom that led to initial spark of prices of many stocks, leading to elevated valuations, right now we are in a realization phase, and that's where this environment is getting more spooky due to this still higher for longer interest rates, and also bonds that are right now falling, and also grappling with itself at the stock's valuation. So in my view, Rivian Automotive is, despite a positive delivery and also other elements, heading for some problems ahead. Let me just find out, as I just lost one of the elements of my presentation, so I just quickly just have a look at what's going on. So it looks like we are about to wrap up, as the last slide couldn't really pop up. So the final thoughts and Q&A. So if you have any questions right now, don't hesitate to pop it right at this moment to get back to this of my side. So if I just may recap what's the future ahead of Rivian. For me, the delivery stance is pointing that the Rivian future is somewhat unshaken, but the valuation of a stock still is yet overpriced, possibly in a short or medium term. The stock is very strictly reliant on where the major indexes of US are heading, and for now those majors are falling, and Rivian is dragged by this negative sentiment for now. So Rivian has been held in a price for many weeks, even though the extreme fear was shaking the market here and there. So it brings us that Rivian valuation is likely to go higher, but in the next wave of interest on stocks. So let me know in the comments what you think about Rivian. With reaching above $30 levels, we need, in my view, still hang on and to wait for a profitability of a company. But tell me now whether you are buying on those dips or just waiting for better times to come. Thank you very much for today. Take